I think absolutely it still makes sense to pursue decentralization as a core tenet, or else what are we doing here? I think, despite some of the noise in the past, Ethereum's in kind of a similar boat where, there's lots of pressure to become centralized and just go quicker and these types of things. But if you really want to have truly global infrastructure, decentralization has to be part of that, and you have to really take it seriously. And so I think DAOs, in the way that they've been done, have been sort of the most naive approach. And it's not, we really need to do this for real if we want to scale this and have a decentralized stablecoin that actually is decentralized at the governance level.
Here we are with Sam MacPherson, the CEO and co-founder of Phoenix Labs, which built Spark, which is the first SubDAO of the former MakerDAO, now Sky ecosystem. Sam, it's so great to have you on the Defiant Podcast. Welcome.
Yeah, thanks so much for having me.
So Spark has quickly become one of the biggest protocols in DeFi, and now with over 8 billion of TVL. Like I mentioned, it's the first maker SubDAO, and just a critical piece of DeFi liquidity at this point. But I'd love to kind of take a step back and see what led you into first Maker and then Spark, and just get everyone up to date on this whole kind of endgame roadmap, because so much has happened in Maker/Sky that I feel like people are still kind of having trouble kind of figuring out kind of what's what. So if we can just start with you and your background, what led you to Maker? How long have you been in the ecosystem, and then Spark?
Yeah, for sure. And actually, we hit a critical milestone. Actually, even just today, we passed 10 billion in TVL just because of the market growth over the past few days. So market's going really well. Awesome. But yeah, I can run over the history. So I joined MakerDAO 2021 was when I officially joined. I was kind of community lurker before that. So initially I got involved in crypto in the 2017 ICO cycle, but I was just hobbyist investor at that time. Started learning kind of in the background on the forums and stuff like that. Maker was one of the first protocols that interested me beyond Ethereum. I was really drawn to the smart contracts and this kind of stuff. I was aware of Bitcoin from back in the day. But as a programmer is my trade. So it was really the smart contracts that really kind of interested me. So between 2017 to 2021, I was just kind of just watching the forums, contributing a little bit as just a community member. But I was asked to officially join the protocol engineering team in May of 2021 when that was formed. So I had kind of a unique path in that most of the people that were involved with the protocol at that time were part of the Maker Foundation previously. I was never part of the Maker Foundation. I came in through the community route entirely. So
interesting.
Yeah. So working on various contracts and stuff like that, kind of grew within the core teams, and that we were into more of a leadership role where we were making decisions about what to do within the DAO. But really, having grown up in this running the DAO infrastructure for real, we increasingly saw the limitations of this very flat structure with everything going to governance votes and stuff like that. It was very hard to scale this process, and increasingly it was any sort of initiative that was run that was outside the specific scope of do engineering tasks. It was really hard to do cross coordination between the teams, and so we saw this structure really grinding to a halt. And this was right around when the endgame proposal was proposed at this time. This was about 2022. And so the restructuring into the final form of Maker, which is now rebranded as Sky, as you mentioned, started to take shape, where it would no longer be growth and decision-making done within the core protocol itself, just because it was too prone to politicking and arguments on forum. It was really hard to get anything done, basically. So the SubDAO model was devised as a way to maintain decentralization of the system as a whole, but still able to react to an ever-evolving market conditions. Like you do need to be nimble in the same way that companies are nimble in order to survive in a competitive ecosystem. So the SubDAO model is able to get the best of both worlds, where the core protocol doesn't really make any decisions. Instead, it just provides credit lines to the SubDAOs, and then the SubDAOs, or they're also known as stars, such as Spark, are able to make these more nimble growth initiative-oriented decision-making. And the idea is that some of the stars / SubDAOs will be successful, some will not so much. And much like a free market, the ones that are good at their job will be able to succeed and grow the ecosystem as a whole. But because of the competitive nature, basically the whole system remains decentralized as a whole, but you're still able to make these sort of decision-making.
So it's a really interesting model. And I think experience, just seeing how Maker has evolved and the limitations that you saw of DAOs. And I'm wondering now, with kind of the regulatory risk subsiding, a lot of these, and I'm not necessarily on Maker's case, but in general in crypto, a lot of the decisions to decentralize and be a DAO, or certain kind of decisions with tokens were linked to kind of regulatory risk, like the perception that becoming more decentralized would decrease your chance of running kind of in the crosshairs of the SEC. So with that risk now gone, do you think that it still makes sense to have this DAO structure with all the limitations you've seen, or do you think it will make sense for Sky or other DeFi ecosystems to adopt more of just like a straight corporate structure to kind of streamline things and make things more efficient?
I think absolutely it still makes sense to pursue decentralization as a core tenet, or else what are we doing here? I think, despite some of the noise in the past, Ethereum's in kind of a similar boat where, there's lots of pressure to become centralized and just go quicker and these types of things. But if you really want to have truly global infrastructure, decentralization has to be part of that, and you have to really take it seriously. And so I think DAOs, in the way that they've been done, have been sort of the most naive approach. And it's not, we really need to do this for real if we want to scale this and have a decentralized stablecoin that actually is decentralized at the governance level. And so I honestly don't think we've solved this entirely yet. I think the SubDAO model is the best attempt to get this to do like a scalable decentralized stablecoin for real. We'll see if it works. It's about to be put into practice. Like right now is really when we're putting this up for test for real. So TBD if it's going to work. But I really do think this is an important aspect for multiple layers of the stack. The base infrastructure level, Ethereum L2s, this kind of stuff, and also at the application level with things like Sky and Spark.
So is the main kind of framework or premise of the new Sky architecture that you're keeping a decentralized model, but instead of having everything be ruled by one DAO, the Sky ecosystem is now divided in smaller organizations that are able to better kind of manage themselves?
Exactly. And there's a number of reasons why this is more beneficial than putting everything into one DAO. In that people have different views. They have different ways they think that growth should be pursued within a protocol. And so it really allows people to silo themselves off into what they view as the best method for growing USDS as. And everybody can compete in a free market. And so, and it could even be like those who are involved in the core teams or those who are interested in the token of that particular team. So Spark, we're very focused on EVM chains, L2s, but also other chains that also use the EVM. But there's other teams that are more specialized for, say, Solana, for example, right? this is a growing new market. And so some teams, they're tooled up for Solana, so they can focus on that. We can focus on the Ethereum side. There's other teams that are more focused on real world assets. Again, we're very like DeFi native team, a lot of engineers on our team, so we can really focus on that. And so, yeah, really just allowing people to specialize and really pursue exactly what they're good at is also the other benefit here. But yeah, there is also the nature where you can kind of operate a little bit more of centralized. It's not centralized. There is still a DAO attached to it, but you can be a lot more nimble with these substructures where the token holders who are involved in Spark can be more familiar with what specifically Spark is working on. And so I think that's a big advantage. So you're able to move nimbly, but like the system as a whole, is maintaining this property of decentralization.
Can you explain or dive into more detail on what the relationship is between Spark and other stars or SubDAOs with Sky? Like exactly, like does Sky own a percentage of Spark tokens, or like does Spark need to pay some sort of fee to be a part of the DAO? Like what specifically makes a SubDAO just part of the ecosystem?
Yeah, so you can think of it if you start from like a more traditional, I guess, token template where the amounts are divided up usually between key contributors, investor round, as well as there's allocation for incentives, stuff like that. To be part of the Sky ecosystem, there's a certain set of rules that you basically have to follow. So one is that 65% of the allocation of Spark is sent to Sky to be emitted as token incentives in the Sky farms. But in exchange for that, Spark is able to access the Sky balance sheet, which is a huge advantage. It's how we were able to grow from nothing into like one of the top protocols by TVL within such a short time span. And then the other thing is that Sky has also invested 25 million startup capital into Spark. So with these two things, there is the exchange of tokens. In addition to that, though, all the stars are required to follow the rule set that is set by Sky. So there is freedom to choose for the SubDAO which investment opportunities the star wants to go into. But there is a general risk framework. There has to be not everything is equal risk. So some things may be like relatively low risk. This would be things like CDP style lending, where you have like over collateralized positions in ETH or Bitcoin, and you're taking loans out against that. That's a pretty tried and true safe investment opportunity. Similar with treasury bills. That's in TradFi, this is the risk-free rate essentially. So these sort of investments are viewed as relatively safe for a US dollar stablecoin. But then there will be more risky stuff, which requires the star to post its own equity as first loss capital. This is similar to like what banks will do. There needs to be sort of more junior level capital that's protecting in the event of shortfall, because first and foremost, USDS is a stable coin. It needs to maintain its peg. And so having these layers of insurance is incredibly important for those who are holding the stable coin as depositors.
Right, that makes sense. Okay, so as stars, you need to have 65% of the star token allocated for Sky. And that comes in exchange for investment from Sky, and also access to Sky balance sheet, and also like having to follow specific like risk parameters to ensure USDS peg. Can you explain what exactly does it mean to access the Sky balance sheet?
Yeah, so you can think of it. I think there's a good analogy here, which I think helps. But I want to clarify that these are not banks, but I think banking is like a useful analogy. So you can think of Sky more as like a central bank / issuer that is basically providing liquidity to the commercial banking level, which is the stars. So this analogy I think works pretty well in that the stars themselves are making decisions about like where to lend and what type of investments to go into, whereas Sky is just providing the capital and it lends wholesale to all the stars at the same rate. This is called the base rate. So you can think of this as basically the cost of capital within DeFi, essentially. And so this rate is a market-driven rate. So as in bearish conditions, this rate will be fairly low, a little bit higher than the TradFi risk-free rate as of now. Currently, it's 4.8% for the being that Sky is charging to the stars. And then the stars are able to maintain or retain 100% of the spread that they earn on top of this borrow rate. But the amount that they can borrow is essentially unlimited. I mean, to within the balance sheet, there are limits on the amount of capital available. But basically, if there's cash on the balance sheet, the stars are able to borrow that as much as they can. And if they can deploy it into investments that are yielding higher, and then they're able to do so as much as they can.
Okay, got it. Yeah, that's a big leg up. And so how does that count in terms of Spark's TVL? Like, does Sky's TVL count as part of Spark's, or is that separate?
No, they're separate. So Spark's TVL is two things. One is Sparkland, which is the first product that we launched in May of 2023, which is a lending market. And then the second one, which is contributing to more of the TVL now, is called the Spark Liquidity Layer, which is deploying over $4 billion in capital, and it's actively deploying it across all opportunities within DeFi, CeFi, and TradFi. So this allocation is split and will rebalance depending on market conditions, but we're plugged into this will be Sparkland, Aave, Morpho, Fluid. We're plugged into Maple, Athena, as well as we support Base, Arbitrum, Optimism, Unichain, and we're looking to basically get on all chains. So the idea is there that we just connect into all the lending infrastructure, and so we're able to tap into all the opportunities that are available. Oh, and in addition, the treasury bills products like BlackRock, BUIDL, Superstate USTB, and Centrifuge JTRSY.
The PR Genius is a top crypto PR and growth marketing agency, helping brands globally with expert PR and strategic growth marketing. They've worked with 300 plus projects like Movement Labs and IO.net. Unlike traditional agencies, they charge only on performance. Their services include earned PR opportunities and marketing services to help boost wallet holders and organic X followers. Learn more at www.theprgenius.com.
Can you dive deeper into what Sparkland does and what the Spark liquidity layer does?
Yeah. So maybe I can go through the history of this a little bit to kind of explain how this all came about. So originally this was called the DAI Direct Deposit Module, which let's go back to the beginning actually. So Maker used to be like CDPs. I think that's how everybody knows about it. Lock up your ETH and then mint some DAI. So it was quickly observed after this that there were external lending markets that were forming, Compound, one of the first, but Aave as well, that we could they had DAI markets, so we could just directly mint into these, into the DAI market, basically, and then it would basically onboard those as distribution for new users to take loans who prefer to use other lending markets. So we built the first iteration of this towards the end of 2021 in a collaboration with Aave. And so we were directly depositing DAI into that market. But so for the launch of Spark, what we wanted to do was have a more internal market that was running with our risk parameters and stuff like that. And so this was the birth of Sparkland. It's a money market similar to Aave or Compound. So that component allowed features within the DAI ecosystem, such as cross-margin collateral, rehypothecation. These were becoming increasingly popular at the time. So we were able to serve this feature set to the users. But then it was also connected with this D3M module. And so the Spark liquidity layer is like the most general version that you can do of lending. It's basically this D3M module, but it's multi-asset, it's multi-chain. It supports all these different kinds of lending market infrastructure. So it just sort of, it basically kicks this up to the most extreme where you can do lending on all these other platforms. So we're basically integrating all of DeFi directly into Spark. That's what the Spark liquidity layer is. And so this was launched at the end of last year. And it's been really exciting. It's been scaling up quite significantly, and now it's operating at scale. And this is providing now the most majority of the TVL to Spark is split between this and Sparkland, the money market. So
Sparkland is a money market, a lending protocol that allows users to deposit ETH and borrow DAI and other stablecoins, I imagine.
Yeah, so that's the other thing. We're also supporting all stablecoins in general now. So previously, it was just supporting DAI. So now we support USDS, we support USDC. We're increasingly adding support for USDT. So you can think of it more generally like we're just like a stablecoin lending protocol that has sort of a special affiliation with USDS.
Okay, so that's Sparkland. And then the Spark Liquidity, is it kind of like an interface into all of DeFi lending? Or do you like own, because like you said you're integrating with Morpho and like all these other lenders. So is it an interface to gain access to those markets?
Exactly. And I think we can use the Morpho Coinbase integration as a good example of this. So with Sparkland, this is on Ethereum. This is our own internal infrastructure. And now Coinbase is gone and they want to launch their Bitcoin Borrow product, which they launched at the beginning of this year. So Spark is actually providing over 80% of the capital into that market in USDC, right? It's not even using USDS. So they want to use USDC. They're Coinbase, they're affiliated with USDC. That's perfectly fine. So the Spark liquidity layer is the back-end infrastructure, which will take the USDC that's on Ethereum mainnet. It will bridge it over to Base. It will stick it in the Morpho market. And then somebody who's using the Coinbase app, who maybe isn't even using DeFi directly, can just use this nice UX and just associate with the Coinbase brand. They're not even sure what's going on in the background, really, and they don't have to be, but they can plug into this infrastructure that seamlessly provides them liquidity that arrives just on demand as they borrow it. So this is really like the ultimate culmination of the DeFi Legos. I find it like still fascinating, this whole thing.
But so why would somebody go through Spark to access Morpho, for example? Like, what's the benefit?
Okay. So in that case, that is on the borrowing side. But on the lending side, we have a more user-facing thing. This is called Spark Savings. So this is allows people to deposit their stable coins. And again, we're agnostic on the stable coins. So we support USDC, we support USDS, and we've increasingly adding support for USDT as well. So you as a user can basically just deposit your stablecoins. And again, multi-chain support. So if you're on Arbitrum, you can deposit USDC into the savings product. And we're facilitating or Spark is facilitating the back-end infrastructure that will move the stablecoin liquidity such that you can get in and out of the savings product without having to worry about things such as liquidity fragmentation. So the savings rate right now is 4.5%. So yeah, it's quite a decent and highly liquid risk-adjusted return. And so this is why it's one of the, it is the third largest on-chain stablecoin within the space, USDS. And so this is the infrastructure that the Spark liquidity layer provides.
Okay, so users will just deposit their stablecoins on Spark Liquidity, and then you redirect those stablecoins to kind of the lending protocol that provides the best yield?
Yeah, exactly. Okay. You can think of it. It's like basically before DeFi was very fragmented, you had different chains that they have to worry about liquidity fragmentation and attracting stablecoins. This smooths everything out at the application layer so that it solves liquidity fragmentation to within the capacity of Sky's balance sheet. That's kind of the idea.
It reminds me of Yearn's initial kind of value problem in DeFi, like the yield aggregator. I don't know whatever happened. Like that used to be like a big thing, and I don't know, like it kind of, I don't know if it fizzled out or as like a use case, but
yeah, I mean it's similar to some other things, but this is the first time it's been done at scale. That's the key difference. Like liquidity is basically the whole game, and so the Spark liquidity layer is the first very large scale version of this.
Okay, speaking of large scale, I saw that your TVL recently spiked, and I think like it kind of depends on like what parameters you're taking for TVL. Like so you said it crossed 10 billion. I think I'm kind of like because there's like an option on DeFi Llama to like remove like some like borrow or like governance tokens, or in any case between 8 or 10 billion, but your TVL recently did spike, and this came together with your own token launch and like the incentives related to that. So yeah, can you talk about kind of your recent token launch, what the token is used for, and your incentive program?
Yeah, sorry. And to be clear, the 10 billion number is with borrows enabled. So yes, the token was launched recently. I think it went pretty well. And so with the token, like this is to engage the community and get people more involved with Spark. So there's two main things you can do with the token. One is engage with governance, which is being started up very soon. So there's going to be more active engagement there. People can get involved and make the decisions for the direction of Spark DAO. And as I mentioned, it's quite exciting because like some of these legacy protocols, it's pretty hard to get involved at the ground floor. So this is kind of like a renewal where you can get involved, and specifically if you're a fan of what Spark is doing, then you can get involved with that specifically. So yeah, it's kind of a get on the ground floor again kind of thing right now.
So what will token holders be able to do in governance?
So they're going to be able to, the details are still being worked out exactly what this is going to look like. But it'll be similar sort of gradual ramp up. The thing that needs to happen is like the tokens have to be distributed first. So you kind of want this market to form initially, and then you can start putting more and more like important votes up as things go on and the system. Like you don't want to go all at once. You got to kind of move it along piece by piece, basically.
One of the kind of major expectations with DeFi tokens, especially recently, has been the potential for a fee switch. Is that something that's included or considered within Spark?
There's been no decisions on that yet. But as I said, governance is being worked on. So this will be figured out.
Okay, so maybe part of the roadmap, but unclear.
And I can go into the other utility actually. So there's SPK staking. So SPK holders can deposit into the staking module, which is with Symbiotic. And so that will be used to secure various aspects of the protocol in the future, such as bridging, oracles, this kind of stuff. And in exchange for that, there's Spark points attached to that.
Okay, and speaking of points, like what was the rewards mechanism associated with the token launch?
So for the points, users earn points in season 1, and that's going to run until August 12th is the end of that.
Oh, okay, and to earn points, like do people need to deposit on Spark Land and Spark Liquidity basically, or like what's it required?
So there's a number of ways you can earn points, and they're enumerated on the website. You can deposit into the staking module. You can also be getting the points from a Pendle PTYT program that's been running for a couple months now. These are the two primary ways to do it, but there may be more ways added in the future.
So a big risk of points program have obviously been, there's like a spike of activity, but then these programs end and users, go away. Like how do you balance that kind of, points are a good way of attracting users and activity, but there's also this risk of just like losing that liquidity and and users.
Yeah, I mean, so Spark's in a kind of a unique position within DeFi protocols in that right off the start, it's already a sustainable business. So yes, these points programs are good for attracting attention and stuff like that. But yeah, sustainability is what's ultimately going to be important in the long run. So, but yeah, Spark has, especially through the Spark liquidity layer ramping up, is generating, fees for the protocol, and it's a sustainable model already. So we don't have to worry about that.
You're not relying on points for that.
No.
Awesome.
What if sending crypto felt more human? Pulse just launched Red Packets, a new way to gift tokens with meaning. It's gasless, gamified, and claimable inside group chats only. Think airdrops meet social cues on-chain. Backed by smart wallet tech and live across major L2s, Red Packets turn communities into microeconomies of gratitude and growth. No seed phrases, no friction, just connection with value. Check it out at pulse.social.
Okay, so you just had this very big milestone with your token launch. Your TVL has been surging, even surpassing Sky itself, which is notable to have like the first Sky Star or SubDAO surpass the main protocol in TVL. So what are kind of the next big milestones that you're working towards?
Yeah, so in the short term, it's making sure that the Spark liquidity layer is covering basically all of the market. So we've gone from the launch of last year all the way up to now. We're covering like about, I would say, like 80% of the market. So it's most of the way there, but we really want to get that last little bit.
Wait, sorry, but with 80% of the market, that's like EVM chains or in what?
Yeah, for EVM chains, yes, specifically. So it's covering, I mean, most of the DeFi activity is still on Ethereum, but there's still other markets, such as the Coinbase integration that I mentioned before. That market is already over 500 million and is actually an increasing part of the loan book, which has been a great new growth vector. But the sort of wider picture that's going on is really these Bitcoin-backed loans have just been incredibly popular, especially with the massive price appreciation of Bitcoin. So previously, Spark was fairly constrained to just doing on-chain lending. But with Bitcoin loans in particular, not everybody wants to wrap their Bitcoin and put it on Ethereum, right? For obvious reasons, I think. So being able to tap into this new market has been incredibly important. So something like the Maple integration, which happened in April, has been really, this is another big growth vector where Spark has been able to tap into the revenue of OTC Bitcoin loans. And this could be, either Bitcoin whales who don't want to touch Ethereum, or like institutions who aren't quite, they don't feel quite ready to go into smart contract land yet. They still prefer off-chain custodians. That's perfectly fine. Like our goal with Spark is to just cater to all these markets. And so the short term is going to be continuing to focus on this Bitcoin-backed loans. We're still, of course, supporting Ethereum, but that market is already pretty well covered. And this is going to be the big short-term growth vector, and just onboarding more of the chains and all the major lending markets like Aave, Morpho on all these chains. And so that's where we want to get to, close to 100%.
So with Bitcoin-backed loans, will the way to grow there be to, partner with other centralized exchanges, or like in what ways could you cover more of this market?
Yeah, so I mean, we're talking directly to exchanges and more generally institutions, pretty much all the major players in the space, and so finding ways to issue loans in a number of different ways. So now that we have all this tool, it's basically like a tool belt we have available where maybe they want to do the off-chain custodian. That's fine. We can go through Maple. Maybe they want to come on chain, but they want an isolated market, so that can go through like Morpho. So. We want a way to basically service all these different types of borrowers at the same time. And exchanges, yes, increasingly are taking notice of what's going on with the Bitcoin-backed loans in Coinbase and seeing the wild success there. And I can tell you there's definitely interest there.
Interesting. Okay, so that's a big growth area. The other aspect I want to get your thoughts on is on this just increasing integration between DeFi and fintech, with Robinhood being the obvious kind of latest one. But there's been just like noticeably growing interest from Stripe, PayPal, just like looking into on-chain initiatives. So we'd love your thoughts on like how is kind of Spark involved in any of these maybe partnerships coming up, and just in general, like how do you think these integrations are going to continue playing out?
For sure. And so we've mostly been talking about the supply side of the balance sheet. So for Spark to be doing the ones issuing loans to borrowers. Mm-hmm. But these fintechs, I think, are going to be quite important on the demand side. So this is people who are depositors into USDS or in the Spark savings product into SUSDC or the USDT version of this when that's available. And so, yes, we're talking to fintechs as well as lending infrastructure partners. And so to have users who are maybe not earning a yield on their stable coins. So maybe let me differentiate the pitch of USDS and specifically the yield-bearing version of that versus something like USDC or USDT, which have much more liquidity. So USDS does not compete with these two. So those two are fighting competing in different vertical where they're like payments and exchange settlement and sort of the first for third world countries, stuff like that, where people want access to the US dollar. So that's sort of the first entry point. Where we sit is sort of generating the yield on top of that, on top of those dollars. So the goal of SUSDS is meant to be the best risk-adjusted yield within the space, so that you can set it as like is your go-to savings, and there's liquidity there. You can exit whenever you want, but you're still tapping into the yield that is generated within DeFi, and specifically the crypto native on-chain loans is still most of the balance sheet. These are quite safe investment vehicles, and this has been running since 2019, the early days of DeFi, maker CDP loans. There's been no bad debt on any of these ever. So with the major like ETH and Bitcoin and stuff like that. So this is already a fairly robust yield generation mechanism. And so these fintechs coming in, maybe they all want their own stable coin. Spark is uniquely situated such with access to all the stablecoin liquidity. There's many ways that we can integrate with these fintechs, either providing liquidity for market making with these fintechs that want to have their own stablecoin, or if they want to use Tether or Circle or whatever else, we can have easy to use savings products that integrate directly with these, so that users can get this relatively good yield by default on their stablecoin. So there's a number of different ways of integrating here, and so very excited about. And I think it's really just there's been a sea change in the past year, and now everybody's wanting. This is the time. Everybody's piling in. Yeah,
it's been incredible to see this shift in attitude towards DeFi from just major financial institutions. Like it just that interest just was not here just a few months ago, and now everyone wants a stable coin suddenly.
Exactly. Yeah.
And speaking of that, what are your thoughts on the recent Genius bill passing? That obviously should unlock, as we've seen, a lot of interest in how these major financial institutions can use stablecoins in a more regulated way. But at the same time, there's this limitation, this clear limitation on issuing yield. So yeah, how do you kind of navigate that?
Yeah, so I'll say again, there's a big differentiation between fiat-backed stablecoins and what is like USDS, which is a on-chain stablecoin. So there's no, direct connection to banking rails and stuff that would put it under this regulation. So having this, I'm very pleased about this regulation that's coming in for the fiat-backed stablecoins.
It gives you an advantage. Like you are able to distribute yield.
USDS is able to distribute yield, yes. But yeah, so this legislation is covering fiat-backed stablecoins, and I think this is a very positive thing because, over the past several years, up until the change in the U.S. regulatory situation, it's been kind of like uncertainty. And really, as builders in the space, all we've wanted is clarity on like what the rules of the road are. And so now we're finally getting that. And I think that's going to be a huge boon to the U.S. USD stablecoins in particular are one of the biggest ways that the U.S. can address its debt problem by growing the amount of people that are holding stablecoins. And so, yeah, I think this is just going to be a huge win for the U.S. And I'm really glad they've shifted position and are embracing the benefits of crypto.
For sure. Now, shifting a little bit to just Ethereum more broadly, you're obviously very Ethereum and kind of EVM aligned. Now, ETH is about to turn 10, and similar to kind of this like overnight shift almost that we saw in DeFi, I feel like there was also like an overnight shift in perception about Ethereum. Up until recently, I think the Ethereum community was, a bit, it was kind of like struggling to find direction, and you saw it in the ETH price. And now there's just this renewed optimism. How are you seeing that from the perspective of a builder in the Ethereum ecosystem?
Yeah, I think this is like a classic case of like an incumbent being a little bit too sure of themselves, and then a new startup coming in and kind of threatening them a bit to wake them up. So that threat was obviously Solana, and now sort of you see the incumbent saying, okay, maybe there's some points and maybe we need to adjust a little bit. And you see since, I don't know when this started exactly, but eight months ago-ish, something like that, there's this recognition that, maybe throwing everything into the L2s isn't the best approach. And there should be this, don't neglect the L1 as well, which I agree with completely. I think I believe in the L2 roadmap, but I also don't think that, that the Ethereum should be focused entirely on the L2s. The L1 is important for many different reasons. And so really this is a situation where I'm glad that there's a split focus here. We're like doing multiple things at once, which is good.
Awesome. Okay. Now to start wrapping up, I'd love to just get a sense of the long-term vision for Spark. Like, where would you want Spark to be, and just like broader Sky ecosystem in next 10 years, or I don't know if you think Ethereum kind of takes over as a settlement layer.
Yeah, so I think what we saw in the things like the 2008 global financial crisis are pointing out the issues of the opaqueness of TradFi and what the advantages of blockchain are, which is a global transparent ledger. And so Spark is going to be building the infrastructure that will support the USDS stablecoin, which is the most transparent on-chain stablecoin within the world, I guess. So the goal of this whole system is to be transparency first. So there's many dashboards that are available. So data.spark.fi, you can visit. And we are publishing every single last detail that we can about what is backing USDS, so that you as a depositor can be confident in the structure that you're depositing into. And these sort of like creeping systematic risks, we can reduce those risks as much as we can. And this is sort of the big picture change that's I think happening. So right now we're at the beginning phase of TradFi being sucked into blockchain rails, and stablecoins are the black hole that is dragging everything on chain. It's already proven out the use case as a product market fit for the demand side. And the supply side, it's pulled in treasury bills, but now we see things like private credit coming on chain, and this will just continue to drag everything on chain. And this will be the catalyst that, it won't be DeFi, it won't be TradFi, it'll be, finance in 5-10 years. And so Spark sits at the center of this. able to provide this stablecoin liquidity layer that everybody can tap into.
Do you see USDS as continuing to be kind of maybe third after USDT or USDC, or will it at some point just start to rival the big guys?
Yeah, I mean, definitely need to grow. And so, yeah, we're hopeful that we can grow and become one of the bigger players. But I think there's room for multiple people. And I think having a robust marketplace of options is good for the end user. And that's important. It keeps everybody in check.
And in this world where, just finance keeps coming on chain, in part as collateral to USDS. How would you want this collateral to grow? Because in kind of the very early days, DAI was like fully decentralized, 100% backed by ETH, and then it started taking on more and more different types of collateral to scale. How do you see that? Just like USDS being backed by just a wide variety of different financial assets, or will it go back to just like mostly ETH when ETH is like a lot more valuable if that plays out, or like what's your take there?
So it's definitely multiple assets is the only way to go. You can't operate a stablecoin at scale with just a single backing asset. Even if ETH appreciates a lot in value, doesn't necessarily mean that people are wanting to take loans against it at the same rate that is the demand on the demand side. So there's no reason those two things should match. So fundamentally, if you want to run a stablecoin at scale, you have to accept the fact that it needs to have multiple collaterals backing it.
Yeah, that makes sense. All right, Sam, that was great. Really appreciate you coming on the podcast. And yeah, we'll be following all of Spark's growth.
Oh, thanks so much.